You're listening to the UBC Medicine Learning Network.
Hey listeners, welcome back to Metamorphosis, a podcast designed to help medical students navigate their medical careers. My name is Ali, and I'm a fourth year UBC medical student. I'm recording this episode from my home, which is located on the traditional, ancestral, and unceded territories of the Musqueam, Tsleil-Waututh, and Stolo nations, and I'm grateful to have lived, learned, and worked on these lands for many years. Welcome to episode 3 of It Makes Sense, a mini-series from Metamorphosis that's aimed at helping medical students learn about basic personal finance, a topic not usually covered during medical school. In the last 2 episodes, I've covered student loans and lines of credit. Today's episode is somewhat of a 2-for-1, where I'll be discussing the importance of budgeting and the tax-free savings account. Both of these topics are extremely important and set the foundation for reducing your debt and participating in investing, which will help you reach your financial goals more efficiently. In the first part, I'll cover all things budgeting, and in part 2, I'll follow up with all the information you need regarding the TFSA, or tax-free savings account. Part 1. Budgeting. One of the pillars of financial competency is the ability to budget effectively. Budgeting is creating a plan that accounts for your income sources and expenses. There are many benefits to creating a budget. Most notably, effective budgeting will allow you to understand your spending and estimate whether your savings are on track for your future financial goals. I know this sounds simple, but without a budget, it can become all too easy to fall into excessive spending habits that will only make achieving long-term financial goals, such as purchasing a home or saving for retirement, much more difficult. As mentioned previously, there are many reasons you should be budgeting. In the most simple terms, it's impossible to determine whether you are on track to achieve your goals if you're not keeping track of your financial inflows and outflows. For example, if you have a goal of purchasing a home or retiring by a certain age, achieving that financial goal will require an estimate of your ability to save. Your savings will be the direct result of your income minus your expenses, which is essentially a budget. So without this kind of spending plan, an accurate determination of your savings is a futile endeavor. Extending this a step further, by determining your ability to save via a budget, you will help ensure you aren't overspending. By knowing how much money you're able to or wish to save each month, you can determine whether certain additional expenses will allow you to reach your financial goals or not, preventing overspending. In the context of a student who is relying on student loans and lines of credit, overspending is even more dangerous, as the money being spent is not income, but rather debt, which will eventually need to be repaid, and potentially with interest. Furthermore, as medical students, we have an intimate understanding of the importance of being prepared for emergencies. Part of effective budgeting is allocating an emergency fund, which are funds set aside for unexpected expenses when life deals you an unexpected surprise. In summary, budgeting helps you plan and reach your financial goals. It helps you avoid overspending and ensures you are financially prepared in case of unexpected life circumstances. I believe that budgeting is vital to financial competency and literacy. I also believe that the average Canadian medical student has many other things placing a tax on their time, from attending classes to studying for exams to completing clinical rotations and even preparing CARMS letters. Therefore, budgeting should be as simple and easy to maintain as possible, so that there's a greater likelihood that a busy medical student will be able to continue this healthy financial habit despite other demands on their time. The most simple budgeting spreadsheet is available for free through Google Sheets. While logged into your Google account, simply open Google Sheets from any web browser. On the main landing page, you will see the option for a pre-designed template called Monthly Budget. An annual version is also available in the pre-designed templates, if you need it. I personally like this spreadsheet for its simplicity. It's a great starting point for the individual brand new to budgeting, as it includes all of the basic budgeting information in an approachable user interface, requiring little else but inputting your personal income and expenses. Many students will be relying on loans and lines of credit to fund their expenses during medical school. A budget is still important and recommended in this financial situation. Although student loans and lines of credit are both sources of debt from a budgeting standpoint, during medical school they can somewhat be characterized as sources of income. remember that your cheapest form of debt during medical school will be your student loans, which do not accrue interest during the study period or afterwards. This can be your starting point for your income on your monthly budget. After accounting for any tuition payments, you may have some remaining student loan amount from which you can begin to subtract other expense items, such as rent, groceries, utilities, what have you. If this source of income has been exhausted, your next source of funds would be through your professional student line of credit, which is your second cheapest form of debt during medical school. Of course, this assumes that you have no money saved up from before medical school and no help from any parents or guardians. Any additional expenses will require funds to be drawn from your line of credit, which will accrue interest during the study period. So now you might be asking yourself, what's the point in budgeting if I'm relying on debt to fund my expenses? This is an important question with an even more important answer. Remember that minimizing your debt upon completion of your medical training will help you reach your financial goals sooner, and budgeting, regardless of your income sources, will help you minimize your debt by understanding spending habits, identifying opportunities to reduce expenses, and eliminating overspending. So in summary, budgeting is an extremely valuable personal finance practice that I suggest all individuals with expenses partake in. It is a key step in determining realistic and achievable financial goals and empowers you with the information to guide your own spending habits. All in all, the goal of budgeting is to help you save your hard-earned money, or at least in the case of a medical student relying on loans and lines of credit, minimize your debt load as you transition from medical school into residency and eventually into practice. Once you have a budget in place, you can take your financial journey to the next level and begin learning about ways to make your money work for you. By investing, of course. P.S. If you're looking for a more advanced budgeting template, my favorite freely available ones include the Poor Man's Spreadsheet and the Spreadsheet for People Who Don't Know How to Budget. Now, these are real spreadsheets that have been created by Reddit users and can be found via a simple Google search of the previously mentioned titles. Part 2. The Tax-Free Savings Account, or TFSA. Let's start with the basics. What is a tax-free savings account? First, a quick bit of history. The TFSA program was introduced in 2008 in the federal budget by the late Canadian Federal Minister of Finance, Jim Flaherty. The TFSA is a registered account that Canadians aged 18 and older can open. In some provinces, including British Columbia, the age of majority is 19, and therefore opening of a TFSA may be delayed until the individual turns 19 years of age. The key difference between a regular savings account, which most of us probably have, and a TFSA is in its name. The income earned within this account is not taxed. For example, if you invest $100 from your tax-free savings account into the stock market and earn 10% or $10, should you decide to sell your investment and take out $110 from your TFSA account, you would be able to do so without being taxed on the $10 that you earned. This is important to note because capital gains are taxed at a very high rate. For the record, capital gains is an increase in asset value realized upon sale of said asset. What is contribution room? It's important to understand that the TFSA is not an unlimited savings account. When you first open your TFSA account, you are entitled to a standard contribution room, or amount of money you can add to and use within the account. When this program launched in 2009, the annual contribution room was $5,000, and it was $5,000 per year from the years 2009 until 2013. In 2013, the contribution room was increased to $5,500, and in 2015, the contribution room was increased further to $10,000. However, a change in the federal government resulted in a return to $5,500 for the years 2016 through 2018, although I do wish we were still at the 2015 numbers. The contribution room again increased to $6,000 from 2019 to 2022. So cumulatively, an individual who was 18 years of age in 2009 when this program first began would now have a total TFSA limit of $81,500 in 2022, meaning they are able to invest $81,500 with zero taxation on any of the income or capital gains that they realize when they invest that money. Any contribution room not used in a certain year may be carried forward to future years. But note, you only collect contribution room for the years you are eligible to have a TFSA. For example, if I turned 19 in the year 2014, I would only be eligible to begin accumulating contribution room from 2014 onwards, not from the date the TFSA program started. Any contributions made in excess of your contribution limit will be subject to a 1% tax on a monthly basis on the maximum excess amount noted during that entire month, and this will be charged monthly until those excess funds are removed. So now you're probably thinking, Ali, this is super exciting. I don't have a TFSA. How can I open one? To open a TFSA, simply contact your bank or credit union. You will need to provide your issuer with your social insurance number and your date of birth in order for them to register your new account as a TFSA. It should be noted that you can open up more than one TFSA with multiple financial institutions, for example. However, the total contribution amount cannot exceed your cumulative total or your yearly contribution room. Now let's cover the investments that can be made within a tax-free savings account. The first is securities listed on a stock exchange. This is simply buying a share of a company that's publicly listed on a common stock exchange, such as the Toronto Stock Exchange or the New York Stock Exchange. Number 2 is bonds, which is essentially loaning money to a publicly limited company. Number 3 is mutual funds. Number 4 is certain shares of small business corporations. Your financial advisor can explain that more to you. Number 5, guaranteed investment certificates. These typically have a fixed duration on them, for example, 1 year. And number 6, the actual money can just be left as cash in your account. Now, how do you invest using a TFSA is another great question. There are 2 types of TFSA accounts that you can open with your financial institution. The first is a regular TFSA account, whose investments will be restricted to the investment types offered by the bank, such as mutual funds, GICs, or savings accounts. The second and more versatile TFSA is a self-directed tax-free savings account. With this account type, you are not restricted to investments offered by your financial institution. You can invest in all of the previously mentioned investment types offered by any financial institution. Now, most financial institutions will have their own investment services. For example, TD has TD Direct Investing, RBC has RBC Direct Investing, and some newer institutions like Wealthsimple, which is an online investment management service, also offer TFSA accounts linked directly to their investing platform. Making withdrawals from a TFSA. Now, naturally, there will come a time where you want or need to withdraw funds from your TFSA account. After all, there are no penalties on withdrawing funds from your TFSA. Generally, you can withdraw any amount from your TFSA at any time. However, any amount you withdraw from your TFSA account will not reduce your contribution room for that year. For example, if my contribution room for 2022 was $6,000 and I make no contribution to my TFSA and instead decide to withdraw $1,000, my contribution room in 2022 would still remain $6,000, and the withdrawal of $1,000 would be added to my contribution room in the next year. You're also able to replace withdrawals within a certain year so long as they do not exceed your cumulative contribution room limits. So for example, I can choose to withdraw $1,000 from my TFSA in January, and in February, I could add that same $1,000 back into my TFSA without issue. So in summary, the TFSA is a powerful investment tool available to Canadians. I can't think of a single reason why any Canadian looking to invest shouldn't do so through a TFSA first. Maximizing your contribution to your tax-free savings account will reduce your tax burden and preserve more of your hard-earned money. If you're a student like myself, you may not have funds to contribute to a TFSA at this time, especially for those students who are relying on debt, such as student loans or lines of credit, to support themselves through their medical education. However, a time will come when you're able to begin saving and investing some of your income. I encourage you to open a TFSA account for the reasons I've laid out to you. For more information on the tax-free savings account, feel free to Google it and follow some links directly to the canada.ca website, or speak with your financial advisor at your financial institution. Okay, we covered a lot in today's episode, and I appreciate all of you tuning in for episode 3 of It Makes Sense, CENTS for reference, a mini-series by the MEDamorphosis Podcast, helping you navigate your medical career. If you have any questions about anything covered in this episode, reach out to us via Instagram at MEDamorphosis Podcast. And if you're enjoying the podcast and want to support us, throw us a follow on Instagram and subscribe to us on whatever platform you're listening in from. Until next time.
This has been a presentation of the UBC Medicine Learning Network.